Good afternoon and welcome to our webinar diving into business income coverage. This is our first installment of the 2023 Insured webinar series hosted by Pennsylvania Lumbermen's Mutual. I'm Lizzie DeGangi, AVP of Marketing here at PLM, and I'll be acting as your host today. I'm joined by a number of my PLM colleagues that you're going to meet momentarily. Before we get started, I just want to welcome everyone that's joining us today. We do understand how busy you are running your businesses, and we truly appreciate you committing the time to learn with us today. So as we get started, here are a few logistics. Our presentation is going to last about 45 minutes, and there will be some additional time at the end for questions. So we encourage you to ask questions throughout the presentation. To do so, there is a Q&A box at the top of your Teams screen. And if you open that up, it will open a panel on the right-hand side where you'll be able to submit questions. After the conclusion of our meeting today, we will be sending you a recording of this event so you can review it in the future or share with others in your organization. We're also going to be sending you some additional takeaways that we'll be reviewing throughout the next hour. If there are any questions that we don't have time to cover today, we'll answer them in our follow-up email or connect with you directly to discuss. So now it's my pleasure to hand it over to our moderator for today's event. Tricia Kilrain is our Assistant Vice President of Field Operations here at PLM. Tricia?
Hi, everybody. It certainly is nice to have all of you here. We appreciate you taking the time to listen to us. I have the pleasure of introducing you to our speakers who are presenting the information today. I've got Chris Moran. Chris is a Senior Business Development Representative for Pennsylvania Lumbermen's Mutual. He resides in Maryland and is responsible for Maryland, Virginia, and West Virginia. What a big territory. Chris is married and has 2 daughters. He enjoys spending time at the beach and with his family, and of course on the golf course with his friends. Chris's career in insurance began in 1999, and he has held a direct writer position as well as a producer role. He is licensed for property, casualty, and life and health, has experience in multiple industries, and has been the recipient of many awards in his insurance career. We are pleased to have Chris as a member of our business development team. I also have Steve Hicks. Steve has spent his entire 13-year career in the insurance industry, and 10 of those years has been with Pennsylvania Lumbermen's Mutual. Steve has served others well by helping them protect what matters to them most, and has been an excellent addition to our team as the Director of Underwriting at PLM. Steve recently earned his Chartered Property Casualty Underwriter designation and has completed his Executive MBA. On a personal note, Steve and his wife are expecting their first child any day, maybe any minute.
Yeah, the phone is not on silent. You'll forgive me, please.
All right. Congratulations, Steve. We're looking forward to your new baby girl. Chris, would you like to start?
Sure. Thank you, Tricia. And just in case I end up flying solo on this and Steve's screen is blank, that means he got the call. And we'll certainly be thinking about you. So I want to say, Delvin, thank you for joining us today. We know you're busy and, especially right smack in the beginning of the March Madness. So those attending, thank you very much as we look to discuss and dive into business interruption, business income coverage, and really illustrate how vitally important it is to your overall commercial insurance program. One of the things we're going to attempt to do today is really discuss in detail the ins and outs about it and just, again, show how important it is. We're going to kick off here shortly with a quick video to really illustrate these things do happen to businesses, unfortunately. And we'd ask everybody who's on the call today is take a moment when we're talking about it to put yourself out of the comfort of where we are right now and put yourself in a position of where the video is as we discuss. And we think it's going to really illustrate how important this vital coverage is to your insurance program.
And firefighters have still been out here today working on those hot spots. This fire was just so intense that literally 3 days afterwards, they're still working on it, making sure that this neighborhood is safe. They're not saying a whole lot about the evidence that has led them to call this an arson, but they do say they are reviewing video and they found something suspicious. The flames reached nearly 75 feet high Saturday night. Fire crews at one point went through 12,000 gallons of water every minute. And the massive fire at this Queen Anne lumber company burned for an entire day, with hot spots still smoking 3 days later.
It ended up being a fourth alarm assignment, and that's significant for the city. That's the first time since 2010 that we actually had a fourth alarm assignment in the city. What that meant was we had approximately 51 units here on scene, 142 personnel, 17 engines, 10 ladder trucks, and a number of other ancillary vehicles supporting the operation.
Seattle Fire Chief Harold Scoggins says they now believe the fire was no accident, and it's officially been ruled an arson. They won't detail any evidence, only mention video surveillance and interviews.
Well, what they looked at was they looked at different footage and talked to different people, and that's what they determined it to be.
The lumber yard is close to the ship canal, and environmental groups are working to learn more about the fire's impact. Right now, the loss is mostly financial. No one was hurt except an expensive amount of now destroyed lumber.
We had a total of 3 structures and 2 large sheds that were filled with lumber that burned, with a dollar value loss of approximately $4.3 million.
Add to that the cost of replacing infrastructure like power lines and the cost of fighting the biggest fire in Seattle in nearly a decade, a cost which has not yet been determined.
Wow, 4 alarms, Steve. That was quite a lumber fire.
Yeah, and Chris, you know, they mentioned it in the video, you know, they even estimated already $4.3 million right out of the gate. And I think that's the way most people, you know, you watch a video like that and you think 3 structures, all that lumber, okay, here's how much we're talking, but what about the bills that keep following? What about the next day? What happens then when we're not in operation and those bills keep coming? And that's what we're here to talk about today is business income coverage and how it can really help fill that gap after a loss. And you mentioned it, Chris, this does happen. You're about to hit us with some stats on, unfortunately, how frequently it can happen. So that's what we're here to talk about. We're going to run through, Chris mentioned, kind of some of the big ticket items, the ins and outs of coverage triggers. It's not something that applies to any business interruption. Unfortunately, it's not just a, hey, we weren't able to operate. There are triggers, so we'll talk about what those are. We'll hit important terms and concepts that you'll want to understand. We'll talk about some of the options that are out there. This is a coverage that can be tailored to your needs and really probably needs to be tailored. And so we'll talk about what those options are, what may fit best, and what the type of things you want to be considering with your broker. We'll run through the business income worksheet and hopefully get you familiar with that if you're not already. Hopefully you are already. This is a group that understands now's the time to be talking about these things. You're here. So I think, you know, you get that. I'm preaching to the choir. But now is the time to understand what is our exposure, not following a loss, not when you're standing there in the street watching that blaze going, geez, did we take a look at this previously? And Chris will wrap us up with some of the big benefits really that this coverage helps provide. So with that, I'll flip it back over. Chris, what do you think maybe the most important protection that there is, at least on the property side?
Well, Steve, it's been in my experience in dealing with businesses and the different types of business I've dealt with, and I can honestly say it is. And in a moment, I'll talk about an example that I remembered the other day, and while preparing for this webinar. But one of the startling statistics that surprised me anyway was that every 5 minutes, there's a non-residential commercial structure fire in this country. So that's over 125,000 per year so far. That's from 221. I'm making that assumption that trend has probably even picked up. And then tie that in to 25% of the business that suffer a loss, such as a fire that we saw in the video, never reopen. And that reminded me, the other day I was on my way to a prospective client for PLM, and I was in a territory which I used to cover for one of my previous employers. And I'm sitting there at the stoplight, and I look over, and there's a parking lot there, and it reminded me of a fire that happened there, and it happened back about 2008, 2009. And if you remember back then, a lot of auto dealerships ended up going out of business, like a lot of other ones, but the auto dealer business, a lot of consolidations. And this had been a location of an auto dealership that went out of business. And I insured a number of auto dealers in and around the Baltimore area. And from one of my auto dealers, the service manager left and opened up his own business at this location. And shortly after he opened for business, he had a catastrophic fire. And the reason I kind of a little intimately involved with it, because the owner of the auto dealer that I insured, where he worked, asked me to help him navigate the claims process, explain what was going on and what to do. And one thing that we found out, that he didn't have any business interruption coverage. And he went out of business. And he had enough building coverage, he had enough property coverage. And what happened as we were going through, the discussions that I discovered was, when he had the opportunity to buy the business, the insurance was put together in a haste to get the bank satisfied, the lender satisfied, and it was really a bare bones. And the intent was to later on kind of backfill in the coverages, and that never happened. He got busy. The agent moved, onto another piece of business, and in between those, that business interruption coverage never added to the policy. And he did suffer catastrophic loss. And again, I was going to take a picture of it, but it's just a parking lot now. But if he did have this vitally important, he probably would still be in business to this day. So it wasn't from a lack of having a building coverage or property coverage, but he didn't have the income to help fund the ongoing operations and what he needed while the business was shut down.
And you're saying that's 1 in 4 businesses.
Yeah,
suffer that same thing. That's
and
staggering.
you can find that with 125,000, over 125,000 non-residential and construction buyers. That's a knockout punch right there, those two statistics.
Yeah.
But luckily,
Absolutely.
we're here, and there is coverage you can purchase, and we're here to make sure that people are aware of what your options are, and not only that it is important, but it is out there, and if you do have it, to make sure you have the right kind. And what we're going to try to answer this question today is really in 3 parts. And the first part is, and maybe not just look at it as an expense. I mean, of course, it's an expense on the balance sheet, but really what it is an investment in the continued viability of your company for a lot of different reasons. You can continue to serve your customers, your employees, and your family. A lot of these businesses are really part of the overall estate planning plan and business continuation plan of our customers. And I'll say one other thing that we were preparing back in 2008. Disaster recovery was thrown around, not really too popular. But the other phrase that you hear a lot today that you didn't hear back then was enterprise risk management. And what we'll look to illustrate, that the business income really should be part of your disaster recovery plan, which fits into your risk response plan of your enterprise risk management. It'll allow you to continue the operation of your business, to keep it going. So once you're back to pre-loss levels, you're hitting the ground running and moving forward. So, and if you do care to look at it solely as an expense, I think what you'll see is it's really pennies on the dollars for what you're really covering and what you're asking, what risk you're transferring to the insurance company. So I guess the next question is, what is business interruption coverage? Basically, first line on the coverage form pays a net income plus continued operating expenses for a business that suffers a direct physical loss to covered property, again, from a covered cause of loss. It suspends the operations either totally or partially through the period of restoration. Now, I know I just machine gunned that, so I want to go back and maybe
fast for me.
So that's, you read these screens and you read the policies, for all these years, it kind of sometimes comes blurting out. But the coverage trick, what Steve alluded to in an earlier slide, is what initiates coverage. We call in the industry a coverage trigger, and that would need to be a direct loss to covered property, your building, for this example, or contents coverage. And it would have to be from what we call a covered cause of loss. So in your policy, there's about 3 different types of forms that you'll see in there called covered cause of loss. And these are perils that have to happen in order for coverage, your insurance contract, to respond to the event. And there's three forms out there. There's basic, broad, and special. Basic and broad are pretty much named perils. So those things have to be named in order for coverage to trigger, and especially more of an all risk, of course, minus flood that's out there. But it's definitely something that, and we'll encourage you to have this conversation, this review with your broker, not only on business income, but a lot of things we're talking about, especially the covered cause of losses. So, next slide, please.
All right, Chris, nice work.
Thank you.
You've clearly been taking your insurance classes. Let's nailed the definition for us. And in that definition, what does business income pay? There were 2 pieces that Chris just laid out. One is net income, the other continued normal operating expenses. The first piece, net income, there's an important difference to understand here in the insurance application. I'm sure many of you with us have accounting backgrounds or are used to the accounting jargon. And for that group, what we're talking about here in the insurance context is net profit or loss before the application of income taxes. And in the accounting world, a way to look at that is EBT. It's real or potential earnings before taxes, because we're talking about restoring you to the place you would have been. It's real and potential earnings before taxes. Does it matter if you're operating at a loss? If we're operating at a loss, should I not be worried about business income coverage? No, you should still think about this coverage because we're talking about the principle of indemnity. So how do we get you to pre-loss condition, which if you're operating at a loss, you might still be operating at a larger loss when you're not operating or incurring a larger loss when you're not operating because of those continued normal operating expenses, which is on our next slide here. And it's that second part of the definition. So what does business income coverage pay out? These are the operating expenses that continue in whole or in part, even while your operations are shut down. So even though you're not operating, these are fixed type costs. These are not marginal. They're going to continue to be incurred. You're going to continue to get bills. And while we're not operating, bringing in income, how do we continue to pay those things? And this coverage is a great way to do that if we haven't funded for it. Mortgage, payments or rent, that's one example. Sorry, but insurance bills, they're going to keep showing up. Now, believe me, in the unfortunate event that this might happen, hopefully at that point, you might be a little bit happier about that insurance bill, but that's one. Payroll's a huge one. With the labor shortage that a lot of people are dealing with, can I afford to continue to pay my trained employees to keep them part of the company? Or do we choose to not do that? And those are things that can be altered by endorsement, some of the options that are out there with this coverage. The period of restoration, that was another word that Chris threw in there, another term. So we're going to pay net income, real or potential, and those continued normal operating expenses that are incurred during the period of restoration. So what is the period of restoration? And that is the time period that starts following the direct physical loss. And there's a note here, usually 72-hour waiting period. That is typical, that this period of restoration actually doesn't begin until 72 hours later. And there are endorsements available that can amend that. the potentially 24-hour waiting period, potentially no waiting period. Just one of the options that are out there that you may want to consider with your broker. And this period ends either the earlier of, and I'll hit the second bullet point, when operations are resumed. So when we're back up and running, great. Or the date that property should be repaired, rebuilt, or replaced with reasonable speed. Why is that important? The should be wording there, and this isn't the most common thing in the world, but I'll hit the bottom of the page here. This period of restoration is impacted by a number of things, and one of them in particular, federal, state, or local government involvement following a loss. If we need to rebuild, do we need to rebuild to a higher code? Something that your broker, you may have heard, ordinance or law. Do we need to rebuild with sprinkler systems, with ramps? Is that going to take longer? Do they need to potentially be involved to check for pollution, those type of things? The ordinance and law piece is not contemplated by the normal business income coverage, but there is luckily an endorsement that you can add so that becomes part of that period of restoration, but is not automatically. That period of restoration, one of the most important pieces of business income coverage. Taking time to estimate here, what is my worst case scenario? How long will it really take me to get back up and running? It's impacted by a number of things. You're going to have loss adjusters out to the site. You've got to have building plans drawn. If you have them already and approved, great. Is a contractor available right now to do the work? Building permits need to be obtained, site prep, rebuilding time, restocking and rehiring. All these things take time. Replacement equipment, right now, a huge one with some of the supply chain issues through COVID. Some of those things take a while to come in. This all impacts the period of restoration, how long it takes me to get back up and running. And that's important because this is the time element piece of business income. You may hear your broker say time element coverage, or you may hear some of the insurance nerds with PLM, time element. This is the time element piece. How long does it take to get back up and running? And understanding that is the key to a few things. One, co-insurance and business income is really just a function of a year. So we're going to walk through a business income worksheet. We're going to talk about what is my 12-month exposure. And then co-insurance in the business income context is just a fraction of a year. So if you're writing your business income coverage with a 50% co-insurance, which is not uncommon, we're talking about a 6-month period of restoration. That's what we're anticipating. So what do all these factors do to that period of restoration? And is that accurate? That's addressing this exposure. It's also important to understand when you look at some of these other coverage options. One of them out there, actual loss sustained. We see that come up from time to time. That has a 12-month limit on the period of restoration. And so in a case where you may have custom equipment or equipment that's delayed by the supply chain, and the period of restoration is actually more than a year, which happens, that's a serious limitation. The 12-month period, it can be a serious limitation. So it's important to take time, really understand how long would it take us to get back up and running, to understand, is the coverage that I'm putting in place adequate for the exposure?
You know, Steve, I think if you told anybody you can build a building or a house in 12 months, I think these days you get laughed at. You know, I think, pre-COVID that was acceptable, but that's not that it's not acceptable, but it's just, I don't think it's realistic any longer. So that's a good
That's
point
a
you
great
made.
point. Yeah.
Yeah. So your standard business income form in its basic form is what we mentioned earlier, you know, pays the net income plus continued operating expenses, but you can broaden that coverage or tailor it, customize to your specific business's needs through certain coverage endorsements that you can purchase or add it onto your policy. You know, one of the number one things, and you'll see this if you ever read the form, that it mentions rental value or rental income. A lot of business owners that we have, they'll have multiple properties out there, their main operating locations, you know, but they may have a couple locations that they rent out to other, you know, usually it's other commercial type enterprises, and they're receiving income from them. But you'll certainly want to have those locations covered for rental income. God forbid if they burn down and you lose an income stream from them. And what we also see a lot of times is there's an LLC that the owners of our businesses will create that'll hold all the property in. And normally it's going to be named as an additional named insured on the policy. So you'll definitely want to make sure that there's a rental value that's being generated. It needs to get paid. That you go with a form that does have that's taken into consideration rental income and rental value. Also, I think we may have mentioned it before, is extra expense. There are two basic forms out there. There's three, but two that we run across a lot. The one that PLM chooses to provide our policyholders with includes extra expense. And extra expense, those are expenses that you normally don't have, but because of a loss, you do have. An example of that could be setting up a trailer or another office in an office park, so you can get your back office operations up and running, accounts payable, HR, so you can keep some resemblance of normal business operations going. Keep in touch with your vendors, your customers, and your employees. So, and again, part of your disaster recovery plan would be a way to get in touch with your employees and for a way to get them in touch with you when disaster does strike. Steve did also mention about the period of indemnity. So usually it's either 12 months or when your building or your property is back to pre-loss conditions and you've made whole. But we all know that normally day one of the grand new reopening, when you're out there, you have a band playing, you have a barbecue out there, and you have a lot of fanfare going on to draw attention to let your community know that you're back in business. And you're looking at the parking lot that day, and there's no cars. And we all know that there's going to take some time for normal business to resume after a loss. So you can extend the period of indemnity for another 30, 60, 90 days, in some cases a little bit longer, until business is back to pre-loss conditions. So the period of indemnity, again, normally stops either, depending on the form that you have, which we'll talk about later, either 12 months or when your property is back to pre-loss conditions. With a period of extended period of indemnity, you can increase that until business does come back.
Yeah, and I'll make a quick note here, because that sounds the grand reopening thing. That sounds awesome, and you're absolutely right. This does allow an extra period to get sales back to, the original level. I will say it does not. The extra expense then does not pick up the band and the barbecue trailer.
Very true. Or the clown car, the clowns, and all that stuff.
Yeah. But it sounds like a great time.
Well, it's always good to be back in business and back and open for business, for sure.
Absolutely. So
one thing we also come across, we see that's usually not included, or the business income form in its basic form usually has maybe about 30 days of ordinary payroll. And as Steve mentioned before, things are taking a longer time to get built back and really built back into pre-loss conditions. So you want to make sure that you have an endorsement that extends the ordinary payroll to your employees. Again, these are employees that you've invested in, you've trained, you've established a great amount of goodwill, and they're really the face of your business. That really helps you get those customers and get those customers coming back. And, I'll tell you a quick story. I was out to one of our customers who had suffered a major loss. Myself and a PLM underwriter went out to visit them to do a post-loss meeting. What went right, what went well, and we were out there, and we met the leadership, and we had the niceties introduced to everybody. And one of the first things they said, they came out and thanked us, and we're very excited to thank us for being able to have the policy, be able to continue paying their employees while the mill was shut down. They said they've invested a lot, they've trained them. It'd be very hard for them to go out and find and replace those employees after the business was back up and running. And so from a good business standpoint, that really helped them out. But really from an altruistic standpoint, and this was mentioned by one of their employees, and we're very grateful to them to being allowed to stay in town, didn't have to travel several hours away to a new job, was able to keep the food on the table, the heat on, and the lights on. So again, you've made a big investment in in your employees. You definitely want to have them coming back when your building is built back new and operational again. They're really going to help you get your customers back and your business activity back to was prior to pre-loss. Another endorsement that we see a lot, and we really see this when a hurricane hits, and a civil authority, and that helps pay any loss of income. That if the state or local authorities, something happens, and usually it's a hurricane that inflicts significant property damage in and around your business, and you're unable to get to your business, your customers are unable to get your business, and you're essentially closed down, that the civil authority endorsement would provide income to your business that was lost due to the civil authority action. Dependent properties also, and we really haven't talked too much about this in the past, but now we're seeing a lot more conversation, especially with what's going on with supply chain issues. So dependent properties would be if you have a main supplier that supplies goods that you sell, and he suffers a property loss, his mill. You're a retail lumber yard, and the mill that you do business with that supplies you with your lumber burns down, and you're unable to get product, and you suffer a loss of income because of that. The dependent property endorsement would help cover any loss of income that you sustained from that. And the last major endorsement. Yeah.
Sorry, I'll hop in there too. That dependent properties, that also can pick up if you have one primary recipient as well. So if you have one customer that you really rely on, you mentioned suppliers, absolutely. If you have one major customer or just a couple major customers that you really depend on, that same form can apply in both those situations.
Absolutely. Great point, Steve.
Great point. Something I probably don't see as much as I would expect, really, and hopefully people consider that with their broker.
Yeah, and just to go back on that, you want to make sure that you'd have to have that when you buy that endorsement, that supplier or customer would have to be listed on that endorsement. The last one that we normally get a lot of discussion with, especially around times that we have major catastrophes that affect not just one location but multiple, usually a community, is just our premises utility interruption, and that would provide income if you sustain a loss of income because of lack of power, communication, or water from your supplier, your power utility company. In the event for that to get paid, the power supplier, whoever, the water, their plant would need to suffer a property loss in order for that to occur. And one limitation that you really want to be wary about is transmission lines are normally not automatically included in that endorsement. So I think we've spoken about it. It's complicated. It is. And hopefully we're not trying to make it more complicated, but it's very important and vitally important that you have this conversation and this discussion on business income with your broker, the ins and outs. And PLM, our business model, really lends support to your broker and yourself to help you navigate and get the questions answered and make sure you have the right coverage for your business that's tailored for your business. And Steve's going to touch on PLM's business model.
Yeah, just a quick note on our business model versus what you're probably the standard in the insurance industry. This graph here to the left, that image, that's your typical company is the insurance company. That would be PLM, in this type of case. The relationship is typically pretty linear. So an insurance company deals with insurance brokers. They sell insurance to you guys out there watching, to insureds. That's what we call your businesses. If you're a customer, our customers we call insureds. So that's typically a pretty linear relationship in standard carrier situations. In PLM's open brokerage distribution model, we deal not only with brokers directly, but we also deal with you guys quite a bit. Hopefully you've met members of our field team, business development reps, loss control reps, and we here in the home office, well, I'm in the home office, we're all virtual now, Chris, but we're all available. And really the point here is that this stuff is very complicated. If you're being told that it's not, or that it's unlimited, don't worry about it. You probably want to talk through it a little bit more because it is complicated. And with PLM, you get the benefit of not just the expertise of your broker, but reach out to us anytime, because that's the strength of this. What we think one of the strengths of this triangle model is that you can draw on not only your broker's expertise, but PLM's expertise in the knowledge that's kind of built up here over the last 128 years. And if complicated's not enough, this is also very much based on financial calculations. Typically, when we talk about business income coverage, this is a conversation that starts to involve CFOs or accountants or both, if that's not strong in your background. These people help along with the broker to make sure that the business income worksheet is accurately completed. And we're going to go through the business income worksheet now and kind of what that is, hopefully demystify this a little bit. When you think about property coverage, something that should hopefully not be very foreign to you is the statement of values. What are we covering? How many buildings do we have? What are the values? What kind of stock limits? What kind of contents coverage are we going to cover? It goes on to a list, a statement of values, and probably you've signed one of those before, I would imagine. The business income worksheet is really just a statement of values for business income. It's taking a look, taking time to review what is my actual exposure, what type of limit do I need based on our experience running this business. And it's putting that down on paper, taking time to do that exercise, considering the period of restoration, that time it's going to take to get back into business. Taking time to do that before a loss. Because here's the piece that I don't know if everyone always understands. No matter what kind of business income coverage you have, this worksheet will be completed in the event of a loss. There is no such thing as an unlimited business income form. It will only ever pay, any business income coverage will only ever pay net income lost, the net income that was lost, and those real normal operating expenses. That is all that any of these coverages are ever going to pay. And so in the event of a loss, whether you're on actual loss sustained or any other of these forms that we're going to touch on, this worksheet gets completed, and that's the amount of the loss. In the event of a loss, a forensic accountant does it. And when we think about the business income worksheet, for us, it's a tool to understand the exposure before the loss. It's a way to not be worried about this standing in the street, watching the blaze. It's understanding beforehand what next. What should we expect? What do we do next? It's a way to already have that worked out before the unfortunate occurrence of a loss of some kind. And for us, I don't know, you guys are still here, which is awesome. To us, that means it's a way to sleep, right? A way to sleep better, because we're doing this beforehand. We don't have to guess at what's going to happen next. Here is when we talk about this stuff, why would an accountant need to be involved? We'll walk through just a couple snapshots of what these look like. There are two columns. There's a 12-month period preceding. So what were actual numbers in the last 12-month period? And then maybe more importantly, the second column is estimated for the next 12 months, because that's what we're covering, right? What's going to happen, what kind of income and expenses are we about to incur? And so that's the side. If you go ahead and click through, that there can be a number of fields, and this is where your broker, the expertise of your broker, your accounting team, and PLM can really help with these. There are different versions. The one that we just scrolled through was the ISO. That's Insurance Service Offices. That's kind of the industry standard. Most time when we talk about forms, if you hear ISO, that's just the industry standard forms services office for the industry. This is an example, another example. You'll see again those same two columns. They managed to fit it onto one page. As long as you're addressing all of those things, you'll be in good shape. PLM has its own version. It's just an Excel copy of the same thing. So it looks a little different, but you're hitting the same notes. And the Excel we have has some of the instructions pop up when you hover over it. So if you ever need a copy, feel free to reach out. Really important in understanding what is my exposure in the event of a loss, what's at risk, and here it is. What would actually ever get paid out? It's the calculation. It's net income that would have been earned had there been no property loss, and those continued normal operating expenses that are incurred during that period of restoration. That's what the form pays out. And working that business income worksheet allows you to understand, what does that number look like for me before loss?
Well, Stephen, and correct me if I'm wrong, but even if you'd never been asked to have a business income worksheet, one is done for you. Either you do it or it's done for you prior to the loss being paid. Correct?
Exactly right. Exactly right. So why not do it beforehand, and so that you can feel comfortable that some of these limitations you might touch on here and some of the options, to make sure they're adequate for your exposure.
Sure. So as Steve mentioned before, there's the offering for business income that's out there. There's three kind of main ones that are in the market today. The first two, I think, are probably the more commonplace, and I would say the middle one is probably, I say most common, and maybe most common is not always a good thing. PLM chooses to offer the first one, which is the standard ISO, again, Insurance Services Offices, Business Interruption Coverage, Form CP0030, edition 1012. I think I'm officially an insurance nerd now, Steve, after rattling that off. The reason that
I'm very proud.
Yeah, and again, once 128 years of experience, really, pans out well when you take into consideration why this is being offered by PLM, because it doesn't have that 12-month limitation on the period of restoration. That now we're finding ourselves in an environment where how long does it take to get a cup of coffee at Starbucks now, let alone having to build a building that was damaged by fire. And it really doesn't have to be a property loss. It doesn't have to be a property loss to pay for business income. But talking about how long it takes, I was just out to one of our insureds recently who's in the process of putting up a new facility. It wasn't damaged. He's expanding his operations, but he started it 18 months ago. So the building is finally up. The equipment, there's some equipment in there, but some of it's still coming in off of boats and being trucked in, and the biggest delay, he said, at first they thought he had 12 to 18 months, now looking at 24 months to hopefully be totally up and operational. But it's the supply chain originally, getting things, from overseas, off the boats, and transported here. But then they had the problem with the construction workers. There's a labor shortage in this country globally, which is taking longer for folks to not only get in and build the building, but then you have the riggers that have to put the heavy equipment in place in the manufacturing facility. So all those things are combined. And thank God, in this case, it was just building a new location. They didn't suffer a loss. But if you did suffer a loss, I think we've established it's probably going to take more than 12 months to get you back up to where you were pre-loss. So that's one of I think the major benefit of offering the standard form. And again, you can broaden that through the endorsements that we offer. The second one is actual loss sustained, and I'll be honest, I'm guilty. When I first started out in my career, I wasn't as knowledgeable, wasn't as experienced, and we went around and we talked and offered the actual loss sustained. We threw the term around unlimited. But as the more you go through your insurance career, you read more forms, you find out more about the insurance industry and the forms and the coverages. You find out that's not true. That's not the case. As Steve mentioned before, there's no unlimited business interruption coverage. Rule number one pays the net loss plus continued operating expenses. There's no form out there that says we pay an unlimited business interruption coverage. So, and again, I was guilty. I've, since that was a long time ago, but I'd much prefer that when I was a broker, before coming to PLM, selling or providing my clients with a CP0030, provided better coverage, longer coverage, and wasn't as restrictive as the actual loss sustained form has with the 12-month limitation for the period of restoration. I think in company, folks that have that right now are really in a bind once they find out they're going past the 12-month to get their building and their property restored. The actual loss sustained, again, has an only extended business income limit of only 60 days. You may or may not, depending on the carrier, be able to extend that. And it does come with an built-in ordinary payroll limitation of 60 days. The third one, which is not as popular, but is out there, and that's a profits form. And that's really based for customized for retail operations. It's based off of a percentage of the retail operations profits.
Yeah, absolutely. It is, to your point, I don't think it's as common. It is tailored for retail operations in the niche. And exactly like you said, you're taking your stock that you're holding for sale, and what's the markup? What is that percentage markup? And that's the coverage that you're picking up here. Okay, on average, 25%. Okay, great. So if I've got $1 million in stock, then I've got, geez, why did I do this to myself? Mental math on the spot. 250,000, is that right?
I'm not going there.
Yeah, all right. But yeah, 25%, there's your markup. And that can be super broad if you have a very quick period of restoration. If you're able to turn around and sell out of the parking lot, or really get back up and running very quickly, that's a very broad coverage because you're picking that up on all of the damaged stock. If that's more than one turn for the period that you're down, for that period of restoration, you're still getting that coverage, whereas a business income coverage, it is only picking up the change in income and operating expenses. Here you're getting that markup for any of the damaged stock, which in some cases can be pretty broad.
Yeah, and yes, I've seen companies, business trying to make a run at operating out of the parking lot, and it doesn't work. So I think we touched on some of the benefits, and we'll just kind of wrap things up here and really get to answering the question of how how vitally important this coverage is. Again, we've mentioned some of the benefits of business income coverage. I think one of the main ones, maybe not one of the most important, is to help keep your trained employees while your business is down. Your employees are usually, I would say all the time, for a business, the heart and soul. They're really what keeps the enterprise going. They service your employees. They turn the lights on and really make sure your business is going to thrive. And you've invested so much with these employees as far as training and goodwill. And globally, we have there is a labor shortage. There's a labor shortage here in the United States. In a lot of the small towns where a lot of our PLMs businesses operate on, they're really small towns, and you really want to make sure you're able to keep those trained employees so they don't have to go off to one of your competitors, and then you may have to outbid them to get them back and offer bonuses, and they don't have to travel several, maybe 100 miles away to the next town to get a job that they were trained for. So it really helps keep your business not only going, but when you're back open for business, you can hit the ground running. Another major benefit, it really helps keep your pre-loss payment terms to your vendors and suppliers. I've seen where a supplier will find out a place ended up having a fire and having a loss, and operations were impacted, and they end up putting their customers on COD. When you have a loss, there's going to be a little bit of an impact to your cash flow until you can get the business income up and running. And you want to make sure that you can go back to your vendor and say, hey, don't worry, I have business income coverage. I'll be able to pay you the same terms as I've had. And again, it'll help you get back on your feet and keep in touch and hopefully keep you supplying and servicing your customers through the time that you're down. And again, the middle point is really help keeping in touch with your customers. You'll be able to, with the extra expense and business income, keep in touch with them and hopefully be able to have some product and goods to sell them, while you're building back up and to where it was before the loss. And again, if you can't keep your customers and stay in touch with them, you lose your employees, that really protects against reputational harm in a lot of these small towns. And we've all heard the whispers that somebody has a fire and say, oh, he didn't have this and he didn't have that type of coverage, and it's really impacting. Now I got to travel several towns away to get this, or I'm an employee and said, yeah, I'm out of a job. It really creates a lot of ill will in the community, and this will help make sure that doesn't happen, and you can keep the reputation that you've worked very hard to have and to build upon. And lastly, why we think it's very important to have the right business income coverage for your business is to make sure your business it keeps going as a going concern. A lot of the business owners, again, we've talked about how important it is to your customers and your employees. But for a lot of our business owners, this business is a key part of their retirement plan. And maybe not so much their retirement plan, but they also may have children in the business that they'd like to pass it down to through business succession planning. And again, it's vitally important to be part of your disaster recovery plan. So when disaster does strike, you do have the funds to really respond to the risk that happened, and really should be really contemplated. I'm going to throw out a term here again, Steve, your enterprise risk management, which may be another webinar that we have at some point in time. But I would definitely say this would be the lifeblood to your disaster recovery plan and your enterprise risk management plan. So I hope we've kind of illustrated how important this protection is. And I know we've thrown out a lot of stats, a lot of technical jargon, but the one thing I'll encourage you to do, and I kind of encourage you to do it when we first started and we started that video, is to kind of put yourself outside the comfortable confines that you're finding yourself in while you're watching this webinar. And maybe also when you're having that meeting with your broker reviewing your policy, either review time or renewal time, and everything's comfortable and then there's no problems. And maybe you're looking at this thing as an expense that maybe you want, maybe you don't have, and hopefully we prove that's something that you really should have. But take yourself when you're having those conversations that it's in the middle of the night, you're on the phone with your insurance company or your broker, you're standing in a puddle of water, you're hearing the crackling of the fire department's walkie-talkies, you smell the smoke, your building's going to be taken care of, the contents, but inevitably you're going to ask yourself, oh my God, what's next? And we really hope business income coverage helps answer that, because I've been there with clients in the middle of the night and I've been able to say to them, don't worry, we're going to get this thing taken care of for you. Thank you very much for joining our webinar today.
Yeah, thank you.
Chris, Steve, thank you so much. There were several of you that were busy entering some questions into our Q&A forum, and I'm going to ask both Steve and Mike to answer these questions. Excuse me, I said Mike, I meant Chris. Don't know who I'm thinking about. So
I go
Steve,
for Mike sometimes, it's okay. I got a Mike face.
Just don't call us late for dinner.
Yeah.
Steve, the first question I'll direct to you. You offered a lot of information and talked about business income worksheets. Does PLM require a business income worksheet?
Yeah, great question. PLM, we request that a business income worksheet be completed. We think it's the best way for everybody to feel comfortable that the coverage you're requesting is appropriate for the exposure. If you don't take time to review that exposure, if you're not looking and considering what is my worst case period of restoration, you're potentially leaving the business at risk, and that's not good. That's not good for anybody. It's not good for you in that case. It's not good for us either, because nobody ends up happy. We're in the business of paying claims, not denying them or not paying them, and we haven't stayed in business for 125 plus years by not helping to protect. So yeah, we do request business income worksheets be completed.
Thank you, Steve, for that complete answer. I appreciate it very much. Chris, this next question I'm going to direct to you, and it's multiple parts. What types of items might not be paid for or are not paid for under business income? Do you have a couple of examples?
Well, one example I've been asked is surprisingly, a number of times throughout my career was, hey, since my business is down, and I normally wouldn't be doing it, but I'm going to go on vacation with my family. Is that something would be covered? And sometimes they were joking, but a couple of times they were serious, and that would not be covered. So what would be covered would be normal operating expenses that you would normally have, or with the case of extra expense that you have now. And it's really expenses to help keep the business going, as we mentioned before. So it really had to be on your on the expense side of your balance sheet.
Perfect. Thanks so much, Chris. And then the second part to that, what about COVID? Is that a covered cause of loss?
No, and that's gotten a lot of, I guess, recognition, and a lot of folks have talked about that for the past couple of years. But it's not, and for several different reasons. So let's not forget it was a 100-year incident that happened. There was no way that could have been contemplated or forecasted. There's no actuarial data of if this was going to happen when business income was developed and priced. So in essence, you would never charge for that peril. And because when we have an insurance coverage, a couple things have to happen. It has to be measurable, and we have to have some sort of history so we can figure out from the actuaries, we'll know that we have a good or not good chance of this happening. But basically, it was never contemplated to be factored into the coverage, so it was never priced into it. That means customers were never charged for that peril. And if you remember the peril, the covered cause of losses, COVID or communicable disease was never part or listed as a covered cause of loss ever. Maybe it will going forward. I think you can find it in the excess surplus lines. I know during COVID, I was a broker. There was coverage for that. It was very expensive, very expensive. But in the standard market, you're not gonna find that. And I know recently there was a court challenge by Madison Square Garden, which was found in favor of the insurer for declining that business interruption claim, business income claim because of COVID.
All right. Thanks so much. I appreciate it, Chris. Steve, I'm going to leave this last question for you. Where can I find out more about business continuity planning?
Sure. Yeah, business income coverage, huge part of that process. And if you're looking for more information, how do I work through that process? What else do I need to be considering in disaster recovery? There are some great resources out there. One that we point to a lot, there is the Insurance Institute for Business and Home Safety, IBHS for short. They have some free, very helpful material available out on their website. That website, I'm sure, will come to you in either the web chat here or out on some of the follow-up stuff, but it's pretty quick. It's disastersafety.org. There's business protection out there and disaster planning. Definitely worth checking out if you haven't worked through this already.
Thank you so much, Steve.
Sure.
All right, I think that's all the time we have for today. But Steve and Chris, thank you for sharing your expertise with us today. I think the conversation did a lot to really help demystify this very important coverage. As a reminder to everyone that's with us, we will be sending you a follow-up email with a link to this webinar recording, as well as some of the additional takeaways, like that business continuity toolkit that Steve just mentioned. We'll also be including a survey in the link or in the email, and we really hope you take the time to provide us with some feedback so we can further enhance our webinars for you in the future. If you do have any additional questions, we encourage you to reach out to any of us that are here today or any of your trusted PLM representatives. So on behalf of Tricia, Steve, Chris, and really everyone here at PLM, we thank you for committing your time to us today, and we hope you all have a great afternoon. Thanks.